All right, welcome to PreciseAlgorithmTrading.com. It's Tuesday, May 28th. Hope everybody had a good long Memorial Day weekend. And let's talk about what's happening in the markets. I think they're becoming clearer about what's going on, but let's do our automated trading first. Um, the It's interesting. This is the Dow futures. Oops. And uh, I usually don't really look too hard at trading on the holiday, which was Monday. But it did go ahead and take a trade, and it was a good one for. That's part of the reason why I don't usually do it is because it's normally not a very. It's not a big move one way or the other. And of course, you can see today it gave it all back, but that's okay. I mean, it's kind of part of trading. But the Russell is still trying to get out of its own way, and didn't trade since the 24th until today, and it's just a series of stop outs like it's been. The NASDAQ also traded yesterday. One nice trade. So I guess I'm going to continue to leave the system on days off. But you can see it gave all of that back today with a number of, four stop outs, little ones. And again, that's okay. It works itself out in the details. So this is the old NASDAQ. Um, just continuing to compare it. I know we have some folks that are using it, and it also has the same $1,500 stop out, but it's got more volatility on the short side. So, for what it's worth, that is what these are all short stop losses. In fact, there's long and short stop losses for 150. So, um, no, sorry, those are all short stop losses. My bad. So, I believe. Anyway, it's interesting that this one ends up being $1,500. I must have multiple stops in there built in. I just don't remember the math right now. So, but in any case, this equity curve literally is the same math as this equity curve with that volume spike that we added um, to the equation. So this one doesn't trade unless it has it, and this one trades regardless. So all right, moving on, we've got quite a bit to cover, and I'm going to try to do this quickly. Something I worked on over the weekend is a better stop loss, and it looks like this. And I've got the wave in here for the sake of understanding how wave structures work, but I think it's probably clearer if I take it off. And let's use QQQ just because we're always looking at the S&P. Let's take off the waves and let's look at what this thing's telling us. So the the swing points, my yellow dots, are really important in a trend. So if you're trending up, like it was back here, your swing points are going to dictate the bottom of the trend, and not always the last swing point, although it's kind of handy when it is the last swing point. Sometimes you get this dip, which would, if you set it at your last swing point, you'd get stopped out, which I think is actually okay. Because if we laid in the simple 30, the weighted 30, or the exponential 30 moving average on this, or even the 15, you would see the trend in the moving average, and you could trade when you break back above it, you can trade the same way we were talking about it. Um, you could buy on pullbacks of it, and you could use either one stop back or two stops or two pivots back, and that's a little bit of discretion. But the reason is if you use two, like when you were here, and you go to the two stops and it's the lower one, then you wouldn't get stopped out here. Now that's all in hindsight. That's not to say it won't happen, because there's times I'm sure it will. But you can see in this case it wouldn't have. You can see when this was in this down uh, trend here, and it went back to green. Even when it went to gray, you're in the kind of this chop zone. That's not a trend, but when you're trending like this, you can literally use these pivots until you would get stopped out. So let's say you used you were up in a nice, you know, up in value, and then you start to tighten your stop, and you use the last pivot, and then you get stopped out here. So what? I mean, you made, the whole point is making profit. So now let's make it more complicated and not just say don't use one stop back or even two stops back. And once you have two stops established, you can set it at halfway back, which is what this line is, this line of dots. And I'm going to tell you that works most of the time too. The math supports it. Now, none of them are perfect. The best one is actually using one stop back for when I've run it through basically the system that does all the math for us on 10 years worth of data. And that's not the same on every chart either. So my point is you can use a little bit of discretion. You can go two pivots back and be safe. You can go a pivot and a half back and be a little less safe. You can go one pivot back, and in time, not every trade you'll make money. So I think it's pretty cool. It's literally the pivots that I use anyway. It just puts them in a clearer picture, and it gives us, like I say, it was something I could put into the calculator and come up with a pretty good metric on how it works. So I'm going to be using that going forward, unless I can offset it or something to get just a little bit better of an edge, because I still go a few cents below each pivot. I don't use the pivot itself. All right, back to the ES futures, and you're going to see that on these charts. Now, gunks them up a little bit. I thought about taking off my Keltner channels, but I kind of like to know where they're at. Generally speaking, like I say, when you're up in a trend like this and it starts to fall apart and things get tight, I would be out of this trade if I was actually long right now in the S&P, because it would. No, I actually wouldn't. That price never came down and took it out. And that works for SPY as well. Now, if you set your stop right here because you're long in the trade and you're in the money and you're making money, then at any given time this thing could roll over and take you out. I hope you kind of get the point. So, and then when it does roll over, I've got it red underneath and it turns to green basically when the trend rolls back over. So when it's defined as red or green, then the stop is too. When it's gray and it's not sure yet, then it throws it up on both sides. All right, that's enough of that. Let's go to let's see. So the S&P today went down. I'm sorry, went up 0.37 points. The S&P went up 1.32 points. It's right here. Or very little. The Dow went down 216. Let's look at the Dow. So we never made it up to our 1272 extension. And where are we against the 50% retracement? I don't like that it came back that far, but it is what it is. I'd say we're overextended though to the downside at this point. The Russell, we're going to look at the IWM because the Russell's zeroed out by now. It's hanging out just above the 618 retracement. It went down 0.14% today. The NASDAQ went up 99 points. So the NASDAQ's leading the market to the upside right now. And if it's going to get legs, the rest of the market's going to have to follow suit here pretty soon, or else this thing's going to fall apart. Alright, and let's look finally at IYT. So transportation index is really falling apart, and that's a head and shoulders pattern with potential for price to come all the way back down here. However, we're underneath the Keltner channels at this point, so a bounce makes sense back to the upside. It's looking a bit overextended. A head and shoulders pattern, when everybody sees it, probably won't play out. I've seen that happen many times. Like, you know, the people in the trade desks and stuff like that are all talking to each other, and they all see a head and shoulders pattern, and when that happens, I've seen it just totally not. I mean, it does kind of what it did here, and it's throwing in the little signal there. It needs to take that pivot out, and then just bounces to the other side, and doesn't play out the way that it's quote unquote supposed to. Although it's a known pattern, so anything's possible, it could actually do it. The USO, the oil. So oil's bouncing. Look at that. Oil puts in a new potential trade signal. I am going to draw in a downtrend from the closest tops that I can see. And that broke above. That is noteworthy. See what that guy looks like tomorrow. It's a fairly deep pullback. That looks like it's potentially played out. So, are we going back to the upside? That would be the question. And after you get a new green candle like this tomorrow, I believe we'll start to see new dash lines come across, just like it did back here, to denote the new potential uptrend. All right, that's oil. Let's look at gold. It's looking like a new potential trade on the hourly chart, not so much on the daily chart. And TLT is falling apart even though it broke above my trend line the other day. I'd say this one is a dead duck. So, all right. We'll buzz through these real quick. So, that's when you add them all together. It's showing some pretty serious weakness right now, obviously, and that double top situation that we talked about before. Put the ES back in here. And we were starting to turn green and go up. Now we're starting to unravel again to the downside from the inside out, 15 minute to 30 to 1 hour to 4 hour. There's our Ichimoku cloud. Everything's actually technically still intact here. And the VIX is a lot of back and forth here at the bottom. It is kicking up, obviously. That's causing some of this volatility. So, and don't get me wrong, guys, you need volatility for prices to move. So, just yeah, just be aware we're in a low volatility area, and when it starts to really spike, it could be the market could move lower fast. So that's when I say tighten your stops, make sure you know your exits. And finally, let's go here, look at our point and figure charts, and wrap this up. All right, the industrials went down 2 O's today and down 4.55%. The NYA down 0.74%. The transportation index didn't move. The NASDAQ down 0.3%, holding up okay. The S&P went down 2.1%. The S&P 100 rolled over to a new column of O's. And then the NASDAQ 100 also rolled over to a new column of O's. So there's some pretty serious weakness, looks like growing in the market. That kind of goes with what we're seeing. So, this is a time, in my opinion, lighten up, tighten your stops, and make sure any new entries are diversified. I try to stay away from of course, the S&P right now, that looks like it's ready to roll over. So, S&P stocks, stick with FANG is a good idea. Facebook, Amazon, Netflix, and Google. There are more than that. What's Tesla looking like now? Tesla looks like it's potentially breaking out to the upside, which is the type of stock that can move when the rest of the markets are going down. So is Microsoft, the type of stock that can move. You can see it right here. So that's what I mean. Facebook, Amazon, Netflix, Google, Microsoft, Tesla, those types of stocks. So Anyway, that's what I got. Hope it helps. Take care, guys. Have a great night.